Sound check, please. Let me know if you can hear me. How's it going? Hope everybody's doing great. Uh, Market down in the after hours. Google, I think, and Microsoft are probably both down. That's the market for you. Not a, yeah. Sorry, Rafa. It was tough. It wasn't a whole lot to do. Really, there was just very little to do today, and yesterday also, and yesterday too. It's weird because the market moved so much. You would think we would have a good amount of stuff to do, but there wasn't much. At any rate, welcome. So let's see. Donald, I saw your comment about the earnings. You thought we could possibly maybe have some good earnings for today. We did. We had a pretty good watch list too. Here it is. And look at all these shorts. Just look at these shorts. That's about almost 40. Almost. It's 38. But the problem is when the market is down a lot, and then only a few longs. The longs weren't very good at all. There were only just a few, 3, and then that's real estate. I don't usually do real estate. But the thing is, when the market is down a lot, I can't short. If I do, then most of the time the earnings plays gap up. So that's the main reason. But the other reason is I just started tracking the earnings plays to see how they do. So it's too early for me to start sending out alerts. And I know what you're thinking. Wow, we're already towards the end of April here. Is it too early? Yes. It's not that it's too early, but it still is not clear whether to what's working and what isn't. So trust me, I'm on it, but I'll do it only when it's safe, when I feel it's safe, and I could still be wrong. But as soon as I feel it's safe to start doing earnings, I will let you know for sure. Okay, Donald, thank you. BK, I saw your comment. I don't know if you're around. That was, I thought that was not the way to put it. So, in terms of, the charts, like here, I'll just read the second part. We can be naive to think that charts cause a complex system as the market to move. Sometimes the reason is clear only after the move is made. The charts don't cause the market to move. We use the charts to read the market, to figure out whether the market is bullish or bearish. A lot of people use fundamentals. As you know, most hedge fund managers use the fundamentals, use the macro econ stuff like Ray Dalio. That's too difficult for me. I'm not that smart. But I can look at the chart and see that it's lower. Does that make sense? So we read the charts to try and predict the future based on patterns and probabilities. But just like somebody else might read the fundamentals, might read the yield inversion, this, that, the jobless claims, housing stats, you name it, inflation numbers, Fed policy, global geopolitical stuff, and figure out whether the market is higher or lower based on all of that information. That works too. I'm not that smart. I wish I was. So I just use the charts. It's much easier. But that's what it is. It's not that the charts cause the market to drop. It's just the charts tell us what the market is doing, and based on what we see, hopefully be able to predict where it's headed, or which way it's headed, at least lower or higher. So that's why we use the charts. What else? I saw some other comments. Were there any other questions that I missed? On earnings, when you place ideas only, do you take them or not? When the earnings plays are working, I usually take the ideas also, but with half the size that I do the official plays. So when it's a really good quarter, I also take at least most of them. Sometimes I might run out of buying power or run out of time, but a lot of times I take the ideas as well but with half the size that I do the official plays. Okay. Chris, how do we handle days like today? Do you just take fewer attempts? Do you size down at all? I mean, like a day like today, I still take the plays. There just wasn't much to take. The FFIE was nice. I was on the mic when I said to get in over 196. The PTGX short was nice until it wasn't. There wasn't a whole lot to do. Like on a day like today, show me the good plays. So show me the good setups. If there aren't there, just don't take them. People get in trouble, I think, because they trade randomly. But as long as we don't allow ourselves to trade randomly, to trade things that don't have any patterns, I think we'll be okay. Does that make sense, Chris? But I don't recommend altering the messing up with the sizing, with the position size. I don't like to do that. I just like to, unless I'm like lowering it, not just for today, but going forward. That works also, but I don't like to alter it from day to day because it's just way too difficult, and then it gets emotional too. On the days that you do well, if your share size, if your R now is lower, you're not going to be happy. So that's what it is. When there's good plays, I would take them with the regular R. If there's no good plays, then don't trade. I do think that when it's slow like this, it's a good idea to have to have a hobby or things to do. It's really good to have a hobby. You can go golfing, swimming, this, that, whatever, or other things to do so that you're not staring at your screen all day long. That's always helpful to me. I always maintain a to-do list. Now, obviously, I have a little bit more, I'm also in the room moderating, so I have that to do as well. But I always have a to-do list. And when the market is slow, if I'm also off the mic and there's nothing to do, I start working on it. I don't wait until after the close. So let's see. Even the trades that do show are sometimes not that great. Arch based all afternoon, tried a bunch of times. I see, yeah. I don't think, did it break out, Arch? Did break out, but not a tight base. I would not have done it. Also, the bar is already too big. Bullish, but look, what did I call today? I mean, I called this one, which didn't work, but killed half break even-ish. The AXTA, that's a good play. Right away, I knew it was probably in trouble because of the breakout with no follow-through. Remember, I always talk about this. You get a breakout. If the breakout bar is followed by an inside bar, kill the play under. I killed half, under 67, I think. Or at 67 is where I killed half. It was supposed to be under 72. And then the back half didn't work. But I raised the stop to 40 something. I'm not sure where 40 is. This should be 40 probably. 45. Overall, it lost a little bit. And then, what else was called? You know what I mean? That was it. No, PTGX was called, which made money. Didn't lose money, but it was up an R. Ended up with half an R. And then slightly less, actually. And then the FFIE that was on the mic, and it got halted. That's it. There was really nothing much to call, unfortunately. I feel like I missed out on one play, which might have been the PTGX at the open short. PTGX maybe at the open, but there might have been another play or two that I missed out on, but I know the PTGX was decent at the open short. I don't know if there was a great setup. I doubt it. Maybe the 1, 2, 3 or something like this. See, that's not a great setup on the 1. Let's take a look at the 2. Let's see. I don't think this is not a good setup either. So it dropped nicely, but I don't think it had a great setup. That's the best setup right here. Short. Don't know if it was a 15-minute 1, 2, 3. Sort of. Short under the stop above it. Worked. Would have worked. But yeah, there was just not much to do, honestly. This is what's so weird about the market. You know, in the past when the market dropped 5%, I'd be walking away with, I mean, a lot of money. And these days, especially when the market is bearish, it's hard to find place to do. It's weird. It is really weird. Let's see. But look, we are not trying to be heroes. Meaning, if you find it hard to be disciplined and not trade out of boredom or whatever, then just walk away. We don't have to be we don't have to, you know, like, work on our discipline during the days. If you find it hard to sit tight and lay low while on bad days, on slow days, then it might be good for you to just walk away or get busy doing something else. Okay. Charts was showing its lower before the huge rally in March, and I was too late to switch gear fast enough. Totally agree. We have only charts to objectively. Right. And I know you know this stuff, PK. But just was a gentle reminder, I think, of what we use charts for. And charts don't cause prices to move. Charts are just a plotting of prices. You know, that's it. What's his name? Elon is really gonna regret the Twitter deal at some point, I think. I knew it was a bad idea. So what I think Jeff Bezos is suggesting is that so apparently Twitter had a problem with when it was in China until it got banned by the country. Then they had no leverage over Twitter at all once it got banned by China. But while it was allowed in China, I think they ran into issues. And now that Elon is gonna be owning Twitter, guess what? Twitter will continue to be banned in China, okay? But guess what? They can put leverage on him. They can have leverage over him because he has a huge, you know, China's a huge market for Tesla. It's where they make a lot of their batteries. They have the factory that they just opened not too long ago. So now they can have leverage again over Elon and Tesla because of what gets posted on Twitter, potentially. So I think he got himself into sometimes you can't foresee everything, no matter how smart you are. And he probably is already regretting it, probably, but who knows? I mean, Tesla today 13% as of right now, 13%, 13.2. He owns, I think, 160 billion worth. I mean, you do the math. He's already down 20 billion on Tesla today. Not quite, but almost. So crazy stuff. And then Tesla was the only thing that was, Tesla and Apple were the only two that were holding up, and as you can see, they're not holding up anymore. They're giving it back. I mean, they're coming in hard, failing. Apple failed on the weekly, sort of, you can say. We have a lower high, not a lower high, but we lost the uptrend. We have lower lows and kind of equal highs. And Tesla, I'm not sure what to call that, what kind of a trend this is. You know, the last high was lower than the prior high, which was lower than the one before it. So, and then obviously Google, Microsoft, Amazon. Amazon's down a lot today. In fact, it's down in the post market too, to 227.46 over here. So here's Amazon. Wow. I mean, if it starts to come in, really has a void to $2,000 on Amazon. Huge top now forming. And then here's Google, and it's gapping down. How much is it down in the post market? It did look lower. It did look weak, but I wasn't gonna do Google. It was already at the 20 on the monthly. It's gapping down 9%, or I don't know, it's down 9% on the day, including the post market. See that 9%? But I don't know how much it's down actually in the post market, gapping down, trading at 22.40 or so. Google also has room to like $1,500. You know, look at Google. So it went climactic basically, went climactic. So it has a lot of room to go. And then I think Microsoft looks similar. Microsoft looks pretty similar too. And it's down a little bit, a lot less. It's actually down for the whole day. It's down 5.7% to 264 right here. Interesting stuff. I hope. Yeah, I'm short the market, but that doesn't mean I want there to be a recession, or that I want the economy to go to, you know. No, I don't. I hope it's not as painful this time around as it might end up being, since we haven't had a recession in 15 years, no more, and about 15. So CMG was looking weak actually, but it's not one that I picked. It's on the I mean, I came across it. It was looking lower. CMG looks lower to me, but it's not something I picked. It's not something that I don't think it's on the final list. Don't see it. Yeah, and the ones that I really liked are at the bottom right here today. So CMG, I did come across it. Probably reports tomorrow before the open. It looks lower. It actually looks lower, but not as good as some of the other ones that I came across, but looks lower. CMG. Notice how, you know, even the stuff that's bullish gives way. Oh, they already reported. Okay, let's check. Shows it's down, I guess, a little bit, but just a little bit, like $10. And I don't know, maybe it doesn't trade in the post market. 1420 by 1430. It closed at 1435. So I don't know if it trades in the post market. It's a very thin stock because it's expensive. Right, Google really has, I don't think it's dropping to $1,000, but Google has a lot of room to go. I mean, really, 1,500, let's just say, on Google. You know, sure, has a lot of support there, but I don't think it would be making it down all the way to $1,000. That would be losing 66%. Could happen, but as you know, that, I mean, that's huge for a company like Google. It has no competition almost. So anyways, the scary part about the recession, about the potential of a recession, is you never know how severe it will be. That's kind of the scary part. Like, you know, so who knows? I mean, based on the Qs charts, I went over it this weekend in the video that I did. So this is the Qs right here. The monthly is failing, hasn't totally failed yet, but I mean, it's right there. It's failing. So here's what we got. We have a little bit of support at 300, not a ton. More support at here. That's about 250. Like this bar's lows to 260, and then after that, then this box right here, this area, that's the pandemic prices. So, you know, where do we go? Where are we headed to? No one knows. I'm fairly confident that we will go through 300 because we just got started. I mean, we don't even have a recession yet, of course. You have to have 2 quarters of negative GDP growth. 2 quarters. That's 6 months. So it hasn't started at all if we're gonna have a recession. And the market is usually ahead of the stock market is ahead of the economy by probably 3 to 6 months. For example, last time we bottomed in 2009 after the recession, the market bottomed, to tell you the truth, it bottomed in, I think, November 2008. And then double bottomed, at least on the Qs, double bottomed, like had another here, double bottomed in March 9th was the absolute bottom. But we actually bottomed in November, okay? And then double bottomed, retested the lows in March. The recession wasn't declared over until I think June of 2009. Then that's when the recession was officially over. But notice the market had been rallying for several months, 3, 4, maybe even more months. So the stock market is usually ahead of the economy. That's something that you really need to remember, because people will think, oh no, it's still okay because we don't have a recession. Yeah, by the time that the recession is officially declared, the market will have dropped already 30, 40. I mean, will have dropped a lot. We're already at probably the Qs. How much is the Qs down so far for the year? I can't calculate it based on the monthly. I'd have to go to the daily to calculate it, because I'd have to go to this bar and figure out what the close was, right? From the all-time high, it's probably down 20%. We may be lucky if only a reset. That's why I said that's the scary part, is we don't really know what it's gonna be. Recession, depression, we don't really know. We don't know what what's gonna be affected also. Like, real estate, will it get hit also or not? So those are all questions that will have to wait. That we'll find out real time, I guess. But don't forget this, which is the stock market is ahead of the actual economy. Is always ahead of the economy by maybe 3 to 6 months. So again, right now, people that are not aware of the stock market dropping, they are going about their business thinking it's business as usual. A lot of people don't even know the market is selling off, and they think it's, the economy is just fine, there's no issues. But the market is giving us a different picture, clearly. Okay, so who knows? But 260 probably is the next stop, somewhere here, 260 to 70, that area basically. Okay, this whole box has a lot of support, but I would say towards the bottom of it, and then the next stop after that is here somewhere. Don't know where exactly. I mean, if I wanted to give you the exact bottom, it's right here. That's March. But that means the market will have dropped over 50%, which has only happened twice in the history of the market. Twice, maybe more. So obviously the depression, and then twice in the S&P 500. I think twice, because in 2009, from 2007 to 2009, the S&P dropped exactly 50%. And then obviously the depression dropped 90%. I don't know how much it dropped. The Qs had a 50% drop from the top in 2000 to 2003. Had an 82% drop, and didn't quite drop 50% during the last recession, but close, pretty close. That drop from the top to the bottom there wasn't exactly 50. And then and the Qs obviously wasn't an ETF before the 90s, so we don't have as much history on the Qs. So that's why I don't think we're going all the way back down to pandemic lows, because again, that would mean more than a 50% drop in the market. It's only happened a couple times in the history of the market. But to me, it was like, I don't know. I'm not smart enough to talk about this, but it felt like the Fed and the Federal Reserve and the federal government and the state governments were overdoing it when it came to printing money and stimulus and this and that. They were overdoing it. That's what I felt. And there's always there is always consequences. There's always consequences. And you look at the chart. I mean, the move that we put in after the pandemic, after the whole global economy went into lockdown, to put in this kind of a move, that's not natural. The world economy closes and the market shoots up like never before, ever. I mean, 165% on the Qs from the bottom to the top in less than 2 years, in about a year and 9 months. That's not normal in a pandemic era. Yeah. So they overdid it. They overdid it, and it's not just the Federal Reserve. It was both the Federal Reserve and the federal government. Now the federal government is politicians, so a lot of times they're gonna do what is better for them, not better for the country. So okay, we can overlook that a little bit. But what about the Federal Reserve? They know what they're doing. They're supposed to know what they're doing. So whose fault is it? To some extent, it's the Federal Reserve, more than the federal government. Because again, the government, politicians are going to do what politicians do, right? But the Federal Reserve certainly overdid it. Okay. So now you got inflation. And this is the thing, is that didn't they think it through? We were going to get inflation. I remember as soon as, maybe not exactly right away, but a few months after, like just a few months, a couple months after the Federal Reserve announced what they were doing, the extent of the stimulus they were creating, or the supply, money supply, that they were pumping into the market. I remember reading an article on Bloomberg.com by Ray Dalio. The article wasn't by Ray Dalio, it was about Ray Dalio, and the title was "Inflation is Coming." That's what Ray Dalio said. So, and since inflation was we were gonna get inflation, and interest rates were at zero, meaning, so they should have known that they're basically cornering themselves. They should have known that they were actually cornering themselves, because when interest rate is at zero and inflation is high now, and the stock market tops out, now you're going to raise interest rates, which will be bad for the economy, in addition to inflation, which is really bad for the economy too. So that's when you get, people call it stagflation. So high inflation and in addition to the regular recession. So in addition to high unemployment, all that stuff that you normally have in a normal recession. So this is much worse. But we'll see. It'll be interesting to see how it all plays out. I just pray that it's not catastrophic for the economy, not for people. Okay, no problem. Let's see. Yeah, I'm gonna read it anyway, Nathan. When a stock gaps a few days before earnings, when a stock gaps a few days before earnings, like PTGX, does that make it better for an earnings play or worse? I'd assume worse, because the move has maybe already been made, but maybe it's an indication of an even more bearish move. So okay, no, it's a good question. When a stock gaps and bases at the lows, that's so. Look, when a stock gaps down and does not fill the gap at all, to fill the gap means to rally into above that initial bar and into the gap fill. That's a sign of weakness. That's a real sign of weakness. Now, in this case, it gapped down from a wide range green bar under a long base, and with no support. I mean, that's all the support there was right here. And then below that, no support. So that's why it was called a short. And obviously, I didn't know it was going to gap down. It ended up down 50%, I think, but I didn't know it was going to gap down 40%. We just got lucky. Some news came out on it. I don't think this wasn't an earnings play. It was a regular swing. So anytime you get a gap down and then a base, that's bearish. But in this case, it was particularly bearish because of what it did to the chart, the gap. Gapped under all that, and gapped under wide range green bar, and then couldn't rally into the gap fill. That's lower. Does that make sense? So, okay. So this is a really nice, wasn't a really nice play. We got lucky that it gapped down. It reports in a few days. So we'll see how it's setting up in a few days. We'll see how it sets up. But yeah, if the stock has already dropped 50% a few days earlier, I may not want to do it as an earnings play. But we'll see how it looks and feels when it eventually reports. I mean, I'll see it. It'll come up. It'll get on my list before it reports, and I'll consider it. But yeah, if I see a lot of gaps like this, drop and then a gap, drop and a gap, then earnings, no matter how bad the earnings report's gonna be, a lot of times it doesn't gap much, or it gaps up a little bit because it's factored. It's already as bearish. The bearish sentiment is already to the max. So you're right. You're right in your assumption. I thought you were talking about this play, not necessarily what is about to come yet. Okay. So yeah, when it's down a lot like this, I hesitate to do it because I've been in those plays where they're down a lot, they've been gapping, and then they, when the earnings report comes out, the company might miss out. I mean, miss the numbers, all the estimates, and it still doesn't go. Why? Because it's already factored in. For earnings play, you only look at the chart, or you do. No, I only look at the charts. For earnings plays, I only look at the charts. I don't read the fundamentals. And the idea behind it is I want to find a stock that's bearish. So it's three things. Mostly it's three things. I'll give you the three things. Okay, there's a course on it. You can buy it and learn more about this. It's called the Earnings Engine. It's fairly inexpensive, like a couple $100, I think. But basically, what I look for is I download the earnings list during the day. When I after I get off the mic in the morning, download the list. Then I go through it looking for stocks that are bearish, but that have, for the most, so bearish is the first thing, or bullish if I'm looking long. But let's stick with bearish for now. So a downtrending stock that has a bullish bias. So I mean, meaning it's a bearish stock, but today or the last couple of days or so, investors or traders turned bullish on it. That tells me they have high expectations on a stock that is fundamentally bearish. The trend is down. So those are the two things that I look for. The third thing is I want it to be not too extended. What if the stock is, this is the 20 and it is bearish and it did rally into earnings, but it's still far from the 20, then it's oversold. So I like it to be at or near the 20. So those are the three things that I look for before picking the earnings plays, before deciding to get in it. Or if the stock is bullish, then I like to see, proof that it's bullish, maybe in an uptrend. Okay. And then it's just pulling back to the 20, meaning the stock is bullish, and then yet it's gotten sold the last day or two or three into earnings. So people have low expectations for a stock that's really, really bullish. That's, those are the, so it's like, this is what I said before one time. This is like being bearish on Michael Jordan. It's easy to even if the company doesn't even report blowout numbers, it's easy to create a positive, to gap up and exceed expectations because the stock is bullish and investors are bearish on it. So it's like It's like, you know, asking Michael Jordan if he can jump a few inches. You know, of course he'll blow. You know, he'll jump. His vertical is 50 inch. So you see what I mean? So that's what I look for primarily. So okay, does that make sense? Now the weird part about this strategy, it's an amazing strategy, and I've had my best days ever doing it, playing earnings plays. The weird part about the strategy, and the thing I hate about it, is it doesn't work every quarter. So some quarters when it works, it's amazing. And some quarters it just doesn't work at all. Meaning, you know, you get the criteria, and it just the gap. You know, you think it's a short, it gaps up. You think it's a long, and it gaps down. Why is that? And I don't know the reason for sure. But what I do is I start every quarter taking very small positions, just to test the water and see if it's a good quarter or a bad quarter. If it's a bad quarter, then I don't up my size. If it's a good quarter, then I quickly up my size. That's what I do basically. So I don't know why it's not consistent from quarter to quarter. Yeah, I don't know why. Maybe it has to do with just the overall sentiment in the market. But to, you know, to avoid digging a big hole for myself, I just start every quarter taking small position in each play, like $5,000 in each play, which, you know, and the average gap is 6%, so it's not going to hurt. If you know, if I got it wrong, I might lose a few $1,000s, but that's okay. And when it's good, then and once I realize it's a good quarter, then I try to up my size fairly quickly. Okay, but that's basically what it is. So I'll show you a couple of examples here in a second. Let me show you. Let me see if I can show you something real quick. But I may need to take the broadcast down so that my computer doesn't crash or something. So hold on one sec. Show you what I mean in a minute. So now I'm gonna project, but let's hope that nothing goes wrong. Hold on one sec. Okay, here it is. So basically, and I've discovered various patterns that I like to do, you know, but basically this is a stock that was clearly bullish. The day before earnings, 3 days actually in a row, people sold it, but it's a bullish stock. And then notice it was also at the 20 MA, which is what I like. Does that make sense? So that's the picture basically. Now, the picture might look a little different based on what kind of a setup I get, but that's the idea. It's a bullish stock that got sold into earnings, but it's at the 20 MA, not extended. Does that make sense? That's the idea. This is, you know, bullish stock got sold the day before earnings, right at the 20. Same thing. Okay. And the same for shorts. Bear stock got bought into earnings, into the declining 20. It's a short. Okay. Same with this, but this is super bearish though, because we notice the unfilled gap. Okay. Notice the breakout failure on high volume. Notice the big rounding top, and then it got bought into this nice big rounding top into that declining 20. So this one I did bet a lot on it. I put, I think, 60k in it. I know I did exactly 60k. So it made 20, I can't read it, 22,000, 21,923. And this is, you know, after commission. But that's the idea, whether short or long. Now, again, there are different patterns. But that's the idea. The concept is we're looking for a bullish stock that got sold before earnings at the right location, or a bearish stock that got bought into earnings into earnings at the right location also, which is usually just the 20 MA. Okay, that's it. But unfortunately, they don't always, not every quarter is the same. Usually the last 2 quarters of the year are the best, meaning the July-August quarter, earnings season, and then the October-November earnings season. The worst every year is the first quarter of the year. I don't know why. And then the second worst, or the second, you know, whatever is this quarter, is April-May. The best 2 are usually the last 2. So we'll see. Okay. Any questions about this? Any questions? Showed you a couple of examples, just a couple to illustrate the point, but really it's a marvelous strategy. It's an amazing strategy. Absolutely, yeah. Love it. I absolutely love it. Okay. What else? Any questions? Tomorrow will be, let me take down the charts for just a second here while I project the new chart here. Okay, go back to the platform. Tomorrow, if we end up with a gap down, which we should, it's not going to be very novice, but it depends on where we gap to. It might be. So here's it's not coming up in the room. You guys can't see the chart, can you? I may have to refresh. I'll be right back. Okay, I'm back. Let's see. Let's try one more time. Okay, there you go. So when you have 2 red bars in a row, or you know, even 1 bar in a row, 1 bar, I mean red bar, and then you get a gap down, that's usually novice. So you got 2 big red bars, a gap down, got bought. Now we have another red bar, a gap down. Is that going to be novice or not? Yes or no. First, it'll be, you know, breaking the support, and then second, it's not 2 red bars in a row, it's just 1. And then third, it might be a small gap down. We'll find out tomorrow. But probably the bias is going to be short initially, and if we drop into 10 or 1030, then long. If we drop hard into 10 or 1030, and we get a reversal, then long after that. That might be the game plan for tomorrow. We'll see. It should, you know, the best 2 weeks of the quarter are usually the first 2 weeks of May, but the entire month of May is usually very good. So the best 2 weeks will be the next 2 weeks, but this week should get going here, I hope. I'm working on learning power trends. I understand how you can tell it's ending when it pulls away from the 8, but what if it doesn't? I've been practicing, and sometimes it ends right after I enter without pulling away from the 8. Sometimes it ends by putting in big volume, like your heads up should be the volume. If you give me an example, then we can go over it. It might have not been a power uptrend, you know, that you were thinking it was a power trend. The ones that you want are like the market a few days ago when you mentioned it, when we talked about it. He said you were in it, and that was perfect. They're not always going to be that good, unfortunately, but this move down here, perfect when it's a grind down, especially if you look at it on the 15. You know, just when it's a grind and it's consistent like this, perfect. But yeah, They don't come around that often. So if you find yourself playing a power trend finding a power trend every single day, you might be like being a little bit aggressive. You might be. Okay. Any questions? Any other questions? How do you stay with a trade? It's so hard not to take it when I see profit, even though I know I'm doing it wrong. I took PTGX yesterday after hours, in and out SQQ many times, and this move down. It's not easy. It's a mental thing, BK. But two things I can say about it, because I have the same problem too. Two things I can say about that. One is, if you take plays that you feel 1,000% sure about, you will be a lot less tempted to exit early. But if you take plays that you're not so sure about, that you're just like testing the waters, then you will be, as soon as it goes against you, you'll just get out. So this one, I was fairly sure. I actually said this 2 days ago or whatever. I said I would rather break my hand than get out of the trade, or I would break my hands before I allow myself to get out of this trade. The SQQ, I mean. I'm talking about the SQQ, because I was that confident that we are lower. I was that confident. Why was I so confident? First, the pattern was pretty good, and the weekly was pretty good. But here it was 1, 2, 3 on the weekly. But the main reason is, it was the day that I said was probably the most bearish day I've ever seen in the market. When Tesla gapped up 10%, everything was up a lot, and then yet the market crashed and triggered the 1, 2, 3 on the weekly, broke under the base. Remember that? So I felt it was so bearish. We shouldn't have had this kind of a bar. See, it was on April 21st when Tesla gapped up 10%. Okay, April 21st. So I felt so sure about it that I never felt tempted to get out. Never felt tempted to get out. So that's kind of the secret, I think, to not getting out, is only taking plays that you feel really, really confident about. Okay, so that's the first thing. The second thing is, you might say, well, we can't always wait for trades we feel this confident about. And I would agree with you. A lot of the day trades that I take, I'm not, I like them, but I am not willing to bet my life on them. Whereas the Qs a few days ago, last week, I was that sure. So, and that's what day trading is for. You take trades that are great, amazing maybe, but you're not willing to like hold them overnight blindly and let them maybe crash or rally. No, you're just taking the small move. But ultimately, it's psychological. It's it's not paying attention to the P&L so much and letting the play come to fruition. And with practice, things get easier. So if you initially, you need a little bit of discipline to get over the hump, so to speak. But then once you're there, it becomes a habit, and you can just continue to use a little bit of discipline, but it doesn't require that much discipline, that much energy, because it became a habit, so to speak. So that's what I recommend, is that you don't, you try not to. It's called dollar counting. It's one of the deadly sins of trade, that traders deal with. So 1 second, please. So that's, so just try to not look at your P&L or let your P&L dictate your action. Try to let the chart do the talking for you, and whether you get out or not. Maybe also write down a few rules or a plan for how you're going to manage, and don't deviate from it, even when you feel like without a shred of doubt that it's going to go against you. But you stick with it, because that's part of the discipline, part of the practice. So there's a lot of things to consider. But yeah, I think you posted. You posted what Jesse Livermore said basically. That's pretty good too. In speculation, when the market goes against you, you hope that every day will be the last day. Every bar. I translated it to every bar will be the last bar, and you lose more than you should had you not listened to hope. The same ally that is so potent success bringers to empire builders and pioneers, big and little. And when the market goes your way, you become fearful that the next bar will take away your profit. You get out too soon. So basically, what he's saying is, when the market goes against us, we pay attention to, if we're long, we pay attention to the green bars, because they take away our, they give us hope that the stock will go back up. And when the market goes against us. When the market goes in our favor, we start paying attention to, if we're long, we start paying an inordinate amount of attention to the red bars, because those trigger our fear. So you want to be aware of that fear of giving back your money, and not act on it. And if you do it a few times, not act on it, then it'll become a habit, more of a habit than not. It's never a comfortable thing to watch your money evaporate. I mean, I think yesterday at the open, in my swing account, I have 1,000 shares of the SQQ. I think yesterday at the open, maybe it was up like 7,000 at the open, and at the end of the day it was up like 3,500. Okay, and you can do the math. There's a $3 drop from high to low, so I did lose about 3,000 from the top to the bottom. Just in the swing, I have it also in the IRA account, but just in the swing account, it's not, again, it's not super easy to watch your money go from, your position go from whatever 7,000 to 4,000, or from 60 something hundred. So it's not, but again, I didn't act on it. I'm gonna let the trade come to fruition, and so not gonna act on it, because I'm so comfortable, so confident that this low will not get taken out. If I'm wrong and I give it all back, well, I would rather do that than get out early. Basically, I would rather give it all back and be wrong than get out early and watch it go higher. Okay, that's how I feel. All right, I hope that makes some sense, BK. And again, it's not easy. You have to kind of find your way of dealing with it, and it's not that easy. It's one of the most difficult things about trading. It's probably the single most difficult. And I've done a whole workshop about this topic, and I think it's probably the most common mistakes that traders, like professional traders, or we're not talking about novice traders. Novice traders, their biggest mistake is they take huge losses, and then they get out too early too. On the profitable trades, they get out too early too, but mostly is that they take huge losses. Professional traders learn fairly quickly that if you take huge losses, you'll be gone in no time at all. I mean, you'll wash out of the market. So they stop taking these big losses, but the tricky part is they can't hold on to the winning trades. So that's what I think most professional, semi-professional people deal with, is getting out too early, not taking big losses. No, that's what the novice, the total rookie traders deal with. But again, semi-pro, pro traders, that's what they deal with, and it's the biggest problem. So you have to kind of find your way to deal with it. But like I said, there's a few things that you can pay attention to. The things that we discussed, in addition to what? In addition to making it a habit. If you can just make it a habit, then it'll get easier and easier. Okay, and I still deal with it to this day. Everybody does. All right. Yeah. Okay, everybody. We'll call it a day. I'm gonna start scanning for swing trades, but it's hard now to be entering into new swing trades because the market is down so much, and will be down more maybe tomorrow. But we'll do my part. We'll scan, and we'll be ready for tomorrow. Thanks so much. Have a nice evening, and we'll talk again in the morning. Take care, everybody. Good night.